Limited company versus self-employed. How do the tax regulations change?
So limited company, what actually is a limited company? It's a separate legal entity to yourself. From HMRC's eyes, there's a business and an issue. Once you become a limited company, two completely separate things. In comparison to being self-employed, you are the business. That's where limited and unlimited liability come into play. So, for example, you get sued as a sole trader, self-employed person, suing you as an individual. So any personal assets you have, essentially debt collectors could collect to pay off a debt. Split that to a limited company. There's obviously slight caveats to this. If a limited company has no money, and a limited company gets sued, the company can close without having to pay those debts. There's different tax rates depending on limited company, self-employed. Typically, limited company, you'll get dividends involved because they're distribution of profits, whereas self-employed, every bit of profit the business makes, you personally get taxed on that. Whereas limited company, yes, the company gets taxed on its profits, but you personally only get taxed on the money you take out of the company.
Okay, and
Interesting.
you talked about liability there. Now, what's stopping someone opening a private limited company, running up debts, not being able to pay it back, and then just closing it?
People do try that. People trying it with bounce back loans of COVID. Obviously, if something legal has been done wrong, like you've actually opened a limited company on purpose just to rack up debts, they can sue you. This is something like legal has been done wrong. But if the business is naturally traded and it's accumulated debts, and you actually try to make the business successful and just generally fails, that's where there's that safety net, I guess, as long as there's no personal guarantees in these debts.
Yeah, cool. So anyone listening, don't get any bad ideas.